Okay, we are live.
Yeah. What's up? What's up, Huobi users? Welcome to another episode of Weekly Market Chat. I'm Johnny. I'm the host today. Also, we have Benz here. Hey, Benz, how are you doing?
Hi, Johnny. Hi, everybody. I guess it's just the two of us this week because recently you have been having a lot of AMAs with countless uh, projects. Last
Yeah.
week we have.
Yesterday we just talked to Adrian from Newman Capital, and then tomorrow we're
Mhm.
gonna. We will also have ICP coming over doing an AMA, but Benz, I think you taking leave, so
Yeah,
I'll be in charge of the AMA tomorrow. So hope to see you tomorrow.
yeah.
Let's get started, man. What's up with the market? You want me
Okay.
to You want me to share my screen and do a little bit overview
Sure. I think
on the
you can start
priority?
with the crypto market first, right? And we can move on
Yeah,
to talk about something else. Yeah.
yeah. Can you see my screen? I think I'm sharing.
Yeah, you are.
Yeah, we're now trading 23.7K. Last time we got rejected by the 20 weeks moving average, right? This here.
Right.
It's like last time we got rejected by the 50 weeks moving average was in April, and
Mhm.
then we're now coming across the death cross, let's
Yeah.
say. And also, if you look at the monthly chart, this is the 50 months moving average, and this is a huge resistance too.
Right.
I think we should pay attention to it. But however, if we look at daily chart, and then I think we are sitting well about the 50 days moving average. I think it's a good sign.
Yeah, I
We had
think.
a little bit of retracement, but we're now consolidating. Let's see where we're heading to. What do you think, man?
I think um, using like a
Yeah,
one
let's
day
look at
50
one day.
50 MA versus a 200 MA. It looks like a pretty healthy uptrend because it didn't break, the price didn't break further down to, down below the 50 MA line. So it still seems pretty healthy for now. But
Yeah, it's pretty healthy, man.
yes. And however, just now
Looks
you
like
mentioned about the golden cross or the death cross, right? There was a rejection. Am I right?
yeah, we haven't seen this before,
Yeah.
actually.
Yeah.
And also, if you look at them, yeah, go ahead, man.
This will be like a very interesting time for us to actually test. For a lot of back testers out there, this is pretty interesting. If
Testing
Yeah.
how market reacts to this kind of technical indicators.
Yes. Yeah.
People are saying we're heading to 26K. I think it's possible because I think we have a lot of short positions built up there. We might have a short squeeze,
Yes.
but
I,
the main thing is let's focus on the market drivers, the main driving force, the
mhm.
main driving forces, right? Last week uh, we had a PCE, right? And
Yeah.
the
Last week
PCE data
PCA.
came out and expected. Yeah,
Yes.
what do you think about it?
Mm, I think I think we mentioned regarding the PC briefly last week when we have the EMA with TomiNet. So
Oh,
yeah, we
yeah.
briefly touched about PC, whether PC for, I think for January PC would like be slightly above or would be uh, in line with forecast because prior to that the CPI was actually above forecasted as well. Yeah, so I think it is in line with our expectation, not the market expectation. Hence, when PC came out, the DXY came up, right, immediately. So DXY had a brief run uptrend last week, pretty good uptrend since the PC came out because what we deduce from PC is when PC is a personal consumption expenditure.
Yeah.
So when users or consumers were to spend more, it will cause surge in demand for limited goods and services. Hence, will push CPI up. This is what
Yeah.
we think. So I think the narrative right now with the market is this PC will eventually lead to a higher CPI result leading to February. Yeah. What do you think about it, Johnny?
I pretty much agree with you. Higher PCE means that we have upcoming higher than expected CPI data. The result gonna be bearish to the market because Federal Reserve says their first mission is to control inflation within 2%, and that's what they have been trying to do. And it's also said if they crash the market, it doesn't matter because they have tools to bail out the financial crisis. They have QE, Jerome Powell said, but if they can't get inflation under control, that would be disastrous. That's the story, and that's the things that the Federal Reserve officials have been saying for a long time. But however, I think the market has not been pricing the right picture, or they're not believing what the Fed officials are saying. And I think that's fair because originally back in June, the CPI data really peaked, and since then, the inflation rate was has been coming down, right? But recently, in February, the data proved PCE even rose month to month when we compared PCE data with January's data, and then it was rising actually 0.6% higher than the January's data. And then that is not a good sign for the Federal Reserve officials. They might have to think about are they gonna maintain a high interest rate for a longer time? So the market is now I see a lot of people now adopting and also taking the higher for longer narrative. That's why we have to pay extra attention to the economic activities coming ahead, man.
Yeah, I totally agree with you because I think since mid of last year, Jerome Powell and many FOMC members has been coming out to say that there'll be more pain coming ahead. The pain word has been highlighted so many times previously, and they have been fanning the narrative that interest rates will be here, high interest rate will be here for a long period of time.
Yeah.
Yes.
Yeah. And one thing that's very funny, when Jerome Powell was asked, when will be the time to cut rates, and then Jerome Powell said it's not the time now, but by then we will know.
Yes, exactly. So if you know, we can talk about it. I can show you the graph later. Previously there's market expecting the terminal rate to be at around 5%, 5.5%. Market are pricing around that period of time.
And are you referring to the dot plot?
Yeah, the previous dot plot. Okay.
Can you share screen? Maybe you can share with us, man.
Yeah, sure. Okay. Just a bit.
Sure. Let's look at the dot plot.
Okay. Just a minute, because
let's see what the market is pricing in right now. I think most of the economists are predicting a 25 basis point rate hike in March.
Okay, so if we are looking at this probability, right?
Zoom in a little bit, man.
Okay.
Thanks, bro.
Okay. So for March FOMC meeting, the market is expecting around a 74% of a 25 basis point hike.
25 basis point, yeah.
Yes. And then for May, another 25.
Okay.
Yes. But previously, you see this blue line for the later half of the year. Previously, a lot of market participants are more leaning towards this 50 to 500 to 525 basis point terminal interest rate, meaning that will be the highest.
So the expected terminal rate was raised 25 basis points higher.
Yes.
Okay.
Yeah. So market is like leaning towards a higher interest rate for a longer period of time, because and previously the market is expecting like, okay, the Fed is lowering or cutting interest rates at around November or December period. However, if you see, a larger percentage of the market is now leaning up towards the right side of the blue line,
Yeah.
blue column, right? So we can see that, actually the market is more, I would say, more bearish right now. Like I mean, like in terms of like business environment and stuff like that, market is not really really like very, I would say, optimistic. And if we look at the dot plot, right? Okay, I think I have to take out. Okay, so for the dot plot, the blue one is like the major consensus, the majority consensus. So of the I would say the FOMC members, right? So if you're looking at the latest projection for the whole of 2023, most officials are looking at
525.
Yeah, 525. But if you see a large majority are leaning towards the higher side, right? So so they are more leaning towards a higher interest rate than going below 5%. So this is, this will be reviewed later, I think in March or maybe in April's FOMC meeting. So this will always be revised every quarter. So this is like in December 14th, so it's like 3 months old already. So this will be revised. So I guess they might even push it higher. That's my my gut feeling, right?
Yeah. And I think it has been an entirely different picture right now.
Yes.
Because the February data, PCE data came out hotter than expected, and then people are assuming that CPI in March wouldn't be good looking. And we have a lot of important economic events coming up. And can you share a picture I sent you previously, man?
Okay, just a moment.
Yeah, maybe you can go through the list.
Just a moment, yeah. Stop my share, right?
Yeah.
And then actually I don't really need to share screen. I just need to put it out like
I
this.
can do it, man.
Okay, please.
Yeah, I saw it on Twitter, Dr. Profit, and credit to Dr. Profit for creating this picture. And then we have March 1st. I think it's just released, right? ISM manufacturing PMI, and then DXY just dropped a little bit, but the important one will be non-farm employment change, and also non-farm employment change, and then unemployment rate, that will be also important. CPI month over month, and also CPI year over year. That will be crucial, right? Gotta pay attention to that. And then 14th, also have core CPI month over month, and then PPI will coming out on 15th. Retail sales, which may tell us on the consuming power of retails, right? 15th, and then also PPI, and then retail sales, and then FOMC in late March, 22nd March, right?
Yes, I think right now moving forward, I think for this week there's not many, I would say not many important, like extremely important data that's coming out, right? So this week is the ISM manufacturing employment and manufacturing PMI, which will come out in around 2 hours time, 11 p.m. Singapore time. So
maybe we should also look at the yield curve. Let's see what treasury yields are doing.
Okay, just
do it.
I'll do it, don't worry.
Thanks, man.
Okay, so for the treasury yield curve, right? Okay, you can see it. Okay, so right now The blue one is the one is current, and the green one is 1 month ago. So if you can see, like, okay, the 2 years to 10 years difference, like is inverted, it's still inverted, but it's, you can see, like, after, like, maybe around 6 year treasury bonds or notes, right? It's starting to flatten. But however, I would say that it's less inverted right now, which gives signs to to a lot of people, like, okay, there might be less risk of a recession coming in the next few months or maybe in a year. Because this yield curve has been inverted for almost a year already. You see, yeah, I would say almost a year, like less than a year. So usually, as I previously mentioned, like, if there's an inversion, it takes around 9 months to a year for the U.S. economy to go into recession. Yeah.
I think we are already in a recession. We have been in a recession for quite some time, since the change of definition of what an economic recession is, right?
Yeah.
Since then we have been in a recession for some time, but people don't realize how things are doing right now.
Yes. So there'll be, like, a technical recession, which is like that.
Technical recession.
Technical recession is 2 consecutive quarter of negative GDP, which already happened, right? And however, but the funny thing is, people are saying that we are in a recession, but the US labor market is so strong. There's no way that it's in a recession.
That's a real thing.
Yeah. That is a phenomenon, I think.
We should also consider that the employment data is severely lagged, and we might see employment rate coming down maybe in second half this year. I think that's possible.
I think the employment rate, what I previously saw was around 3.7, but unemployment rate was 3.7%.
Yeah, unemployment rate
was 3.7%. So, which is really strong for US, because their KPI is 4%, right? Their target is 4%. So, this is the reason why the Feds, is so confident that they can just keep hiking the rate, because labor market is strong. Yeah. Okay.
Talking about treasuries, I think they are paying pretty good yields to investors, right?
Yes, like if you were to invest, if you buy a 1-year US Treasury right now, the yield is 5%.
5%, yeah.
Yeah, it's 5%.
And what about 6 months? You have 6 months yields right now.
Yeah, 6 months is around 5.13%.
What about 3 months, man? Do you have 3 months?
Yes,
no?
I think I have. Yeah, I have 3 months over here.
Let's look at it.
3 months is 4.8%.
Okay.
Yeah.
So the best one is 6 months, right?
I think the best one right now is 6 months.
Yeah, in terms of yield.
Yeah.
So I think this one already outperformed the yield dividends of stocks.
Yes, definitely.
I think stocks generally they're doing 5%. And
yeah, I mean, for now, I would say, like, if you look at the past returns of S&P 500, I think it's a known thing that is compounded at 7 to 8% annually, right? So 5% risk-free for 6 months. I mean, like, if you discount it to 6 months, it's around 2.6%, right? 2.5%. So 2.5% in risk-free money, I think, is a pretty good deal. Like, even if you buy a 1 year, which guarantee you a 5%, right? I think this is it's been a long time since US treasuries, like, give so much returns.
Yeah, but they even get better yields now.
Yeah.
And it's no brainer for investors to switch to investing in short-term deals, and because it's risk-free basically.
Yeah.
And yeah, same as with first repo.
Yeah, so
Yeah,
I think right now is in a way, if you think about it, is like the US, the Feds is trying to keep the money, in a way, keep the money in the cash or liquidity in the bank, right? Or in a depository or whatever, so that there's not much liquidity flowing around for interest rates to go up, and for the inflation or CPI to go up. Because
yeah,
there's too much liquidity out there, then inflation will definitely go up. So this is
yeah,
one of the monetary policy that FOMC they employ. So the in layman terms is how they do it, but there's much more things going on behind the scenes. And
yeah.
and let me recap like what happened over the past week and this week and next week.
Sure.
Yeah.
Go ahead, man.
So for this week, there's not many things going on. Like what I mentioned, Johnny mentioned, ISM employment February and ISM manufacturing PMI will be released in around 1.5 hours time. But usually how we deduce whether it's good for stocks or good for equities is when if ISI the PMI data comes out higher than expected, we will usually see DXY to go up. So when DXY were to go up, it means US dollar is strong, hence is bad for equities. To put it simply that way. And for Thursday will be our weekly initial jobless claims. It's still maintaining at 190, 192, 195. So we are expecting jobless claim to still maintain at this level, and maybe go up slightly. And then for Friday, will be Wallace speaks in the morning, 5 a.m. Service PMI, ISM, non-PMI, all these are just indicator. All these are surveys from companies on how is manufacturing sector or non-manufacturing sector are doing. It's not really they collect data from multiple industries, or it's not I would say it's a survey. It's not like aggregated data or stuff like that. So just take it it's with a pinch of salt, but it still sometimes affect the economy. Yeah. Okay, so this is what's gonna happen for this week. I think Johnny, I think there's not much going on this week, right?
Yeah, not much really.
Yeah, I think the most important thing is I think the most crucial thing is Thursday's Euro data, which is the CPI. How is the Eurozone is keeping the CPI in check, right? So if CPI were to go up, because I think their CPI was so much higher previously. So actually their Eurozone CPI has went down already. So if their CPI were to have a rebound or go above expectation or go above previous of 8.6%, you might see the EU to actually continue hike the interest rates. So this will weaken DXY. So this is something that we can potentially look at. For traders out there, we can actually look at this as well, because this will definitely impact DXY also.
Yeah.
Okay, so moving on to this week, Monday, last week. This is last week. Last week, I think we have covered most of it, which is the PCE. PCE came in really hot. Really hot. It's like 4.7 against expectation 4.3, and higher than previous 4.6%. So I think this is really a leading indicator for this month's CPI index. So this is something that we should actually be aware of, not to keep. Mm.
trend is actually quite obvious.
Yes. So
I think inflation is showing some stickiness.
yes,
It's
yeah,
not going away that easily, right?
it's definitely not going the way that easily because I think partly is due to the labor market also. Labor market is really strong, so then people are spending money. More people are spending money because they are employed. So therefore, it's not really sticky.
Yeah.
Yes. So I think for next week, I think most important next week is ADP, non-farm unemployment, non-farm employment for Wednesday, which is usually a leading indicator for Friday's non-farm payrolls. But last month it doesn't seem so. Last month was a shocker because ADP came in, I think, lower or slightly higher. I'm not very sure. I think it's according to forecast, but you see this one.
Yeah.
So it's here. So ADP non-farm employment came in 106, which is lower than as forecast, but non-farm payroll came in 517, much higher than forecast of I think 200,000. So this is definitely a shocker, and hence the export rebounded from there. I think we were talking about it last month, right, Johnny?
Yeah, we already talked about it.
Yes. And then another one is we should also look at the hourly earnings as well, because if wages go out, earnings go up for individuals, people spend more. Spend more means high inflation. Inflation is sticky. So this one thing.
Are they gonna spend the increased wages on meme stocks and also crypto?
I think, and there might. I think there's a chance because, equity is, they are not. They feel that the economic environment in US is not really doing very well. High interest rate means business are not doing well as well, right? I mean,
That's a very interesting narrative.
yeah. So where could they park their money? I mean, for institutional investors, putting their money into US Treasury or US notes for 1 year, it's good. But for retail, they do not have.
They have to opt out to more riskier assets. Right?
Yeah.
That's why retailers love crypto.
Yes. However, US restrictions are pretty strict, and Gemini incident as well, FTX incident as well. So I think they are more. I would say that the risk appetite is still there, but there's not many avenues for them to actually put their money into crypto.
Yeah.
Yeah.
And talking about just putting money with treasuries, Coinbase biggest interest income last year was from treasuries interest.
Yeah.
Coinbase. Yeah.
So I would think like they use their money to put into to roll their assets, and this could be one of the ways that they earn money because I think the exchange business is a very competitive landscape, right? Even though there might be there's a lot of there's a lot of centralized exchanges out there, but to be honest, from my experience, not many centralized exchange are earning money in a sense like they give so much rebates to their users, or they give so many rewards to their users. Their transaction volume are not comparable to big exchange like Binance or Huobi, or even MEXC or Gate.io, because if you look at Coinbase, which I think which is the largest exchange in the US right now, even if you read their annual report, they are not doing well as well, right?
Yeah.
So I think after FTX incident, retail investors are more aware of what exchanges they should put their money in. Like I think last time was like your money, your keys, right? Your key or your money. there's this hashtag going on.
Man.
Yeah, so I think after that incident, more users are more aware, and I think they'll move towards bigger exchanges that are more reputable, or they are exchanges that are more, I would say, in this industry for a very long time. That's why I think. Hence, if they were to invest, I think for US will be definitely Coinbase, right?
Yeah, definitely.
Yeah. So yeah, this is all for the economic events for next week.
Thank you.
I'm not really, to be honest. I think no, just now you showed your graph earlier, right? Which shows the
Which graph?
whole the timeline of the economic activities, right?
Oh yeah.
So I think for the whole of a March, the whole market will be really choppy or really volatile.
Volatile.
Really volatile because we are looking, firstly, other than this week, we are looking at jobs reports, really jobs reports. No, yeah, we are looking at a lot of like jobs report for the second week of March, and then the CPI data for the third week of March, and then the FOMC on the fourth week of March. So there will be
like roller coaster.
Yeah, it will be a roller coaster, compared to last week or the week before. We were saying like, because there's not much economic activities, or there's not much data releasing, hence which I always say, like, no news is good news, right? However, because for the next 3 weeks there will be a lot of news, so there won't be.
But watch out.
Yeah, you better watch out.
Big dips and big pumps.
Yes. That's what I'm worried about. Yeah.
I think we tend to go, more downside room is I tend to think we have more downside room to go, because so let me share with you one of the charts. You can see my screen right now.
Yeah.
I think it's loading. Okay, so the yellow line is the cumulative volume delta on BTC BUSD trading pair, and the blue line represents the cumulative volume delta of other trading pairs, including USDC, USDT, some Bitcoin. This is a Bitcoin chart. So we can see that the pump, as I mentioned in previous episodes, the pump was initiated by aggressive buyers on Binance, because they just had a really huge rise in CVD on USD trading pair. But since then, since we reached 23K, we have been in a negative, I would say, downtrend CVD in all trading pairs, and I deem it as a distribution sign of distribution. That's my take. That's my say. And then that's why I'm saying that we might have some fake pumps coming. And yeah, just one piece of, I found this very interesting indicator. Yeah, and also RP, I think, is building up right now. It's not good for risk appetite, so better watch out for that. Yeah. And then what do you think about they are distributing? I think they're distributing, to be honest, in my honest opinion. Not financial advisor.
I personally feel that there's still some room to actually pump, but I think it's very limited, because I think from what I see right now is the highest it will go right now in the past maybe 1 to 2 weeks is around the 28K to 30K region.
Yeah,
the
almost
highest.
double.
Yeah, no, it's not double, bro. It's right now it's around 24, right? It'll be like 28 to 30. 28 to 30 is around a 20% hike, right?
But the lowest we got back in November and December was 15K, and then
all right,
we now come to 25K. 80%, 90%.
Yeah,
Anyways, that's a pretty good start for 2023. I hope it continues.
yes. Like imagine we will have started our DCA back in December, right?
Oh, then you're getting paid really nicely.
Yeah, you pay at least a good 50%, right?
I always suggest people to take profits, realize profits.
Yeah.
Right? If you don't realize profit, then eventually you're gonna have some unrealized loss.
I know, right, bro?
And let's cover some market news, right?
Mm-hmm.
And recently, Coinbase, they announced that they're launching a layer 2 network in partnership with Optimism, and they are planning to onboard a lot of users. They're planning to do something really big, right? And this is really a piece of big news coming out last week, I think. And what's interesting, funny is that if you go to CoinMarketCap and if you go to CoinMarketCap and then you search, there's a cryptocurrency called Base, and it's not related to Coinbase, right? It's not related to Coinbase. Maybe Base protocol, yeah. Because of Coinbase releasing the news that they're launching the layer 2, and then just got pumped, man. See, just because their name is Base.
What is this
It's
base?
funny, man.
This base protocol.
It's totally unrelated to this news. It's not
Right.
part of Coinbase. Their
Yes.
name is just Base. Coincidence, man.
Yes, I think there's so much misinformation within our community, where
Yeah.
because there's a lot of similar names and there's very little acronyms that you can use.
But sometimes you have to
Yes.
do your own research.
Yes.
Careful about that.
Because
Yeah. Anyways, big news.
yes,
Yeah. Go ahead, man.
like if you were to look at deck screener, for example, which people tend to deck screener tend to look at coins that are very popular, or because they sieve out or filter out those coins that suddenly increase in transaction volume and sharp increase in price. So this deck screener actually filters out all this for you, and show you like what's the highlight for today, what are the few projects that are trading really very well. So however, there's a lot because of DeFi is a decentralized exchange. People can actually list coins or create fake liquidity pools of fake coins, right? For example,
So basically listing shit coins on DEX.
yes. So for example, Arbitrum has not listed any coins yet. Like Arbitrum as in the layer 2. So they have not listed any of their ARB coins yet. However, their ARB coins trading on this liquidity pool already. Yes. So please, if you want to, I mean, like, there's a lot of traders out there who knows what they are doing, who knows like what's Arbitrum, and they want to have can't go in early or get extra additional alpha, right? But because
there's notification, man.
Yes, exactly. So this is the reason why always do your own reading. Read the white paper. At least go to the Twitter to actually read or see whether they have already released their coins, because there are coins that it doesn't represent them but have the same name. So and this is very easy for people to for you to get rug pull if you just put your money into this LP to get promised 1,000 APR within a day, right? So this kind of easy money is really sus.
Very sus.
Yeah.
Okay. And also, let's look at other news like Balance launches device next building block, generalize boost pose, AMMs, and then there's some big news about Balancer. Basically, they have swappers enabled deep liquidity, and then they have good swap prices, some enhanced functions, improvements, some good things about it. Then also people are talking about it, just like we had AMA with Newland Capital yesterday with Adrian, the founder of Newland Capital. We talked about Hong Kong's recent regulation about embracing crypto. Yeah. There's also some bullish news. Yeah, it's good for crypto as well. And also the Fed exchange. You heard of this?
Yeah.
Has been really heated.
Yes, Vela Exchange is something that my listing team has been looking at to list, on Huobi. However, Vela is not something that we still need to do our due diligence to actually,
Yeah.
list this exchange, this DEX, right? So
Yeah. That.
Vela is on Arbitrum, right?
Yeah.
If I'm not wrong.
Yeah. It's on Arbitrum.
Yeah, so recently, we have been picking up a lot of like I would say a lot of social indicators or on-chain activities on transaction that uh, Arbitrum is the current hot chain right now on layer 2. So actually, to be honest, we are looking at a couple of projects to be listed on Huobi, but we still have to do our own due diligence so that we are accountable for our users or traders who use our platform. Because sometimes, even though a project may be really hot, a lot of people want to trade them. However, it may not, gives it may be a very short, it might be a short-term thing, for projects to actually, cash out, or for projects to, but to be honest, just between, off the record, it's like, I feel that there's a lot of projects that are fork of one another. So
Yeah.
it's like, I copy you, you copy me, and I just change a little. Ultimately, they are trying to do the same thing. So this is something that we always need to take note of. Yeah.
And also synthetics. They have version 3 on Ethereum. And yeah. And this is other important news that maybe you should pay attention to if you are an active member of synthetics.
Yeah, synthetics
Right.
is something you call it a old DeFi protocol, right? Synthetics has been around for a very long time. To be it's a fact that without synthetics, DeFi would not work because on paper it's like TVL and everything. Synthetics is like very little. I mean, like dropping TVL and stuff like that. But at the back, synthetics has been doing a lot of things behind the scenes to support the growth of DeFi, in terms of like providing liquidity, providing the back infrastructure for DeFi. So we may not see like synthetics, may not be the best protocol if you compare like DEX or DEX like what you call that, Uniswap, or lending services like Aave, right? Synthetics is something different, from my own opinion, because they're neither, I would say they're very big, but they are still very important for the growth of DeFi, and they're still innovating, nonetheless, despite Uniswap expanding to other chains other than Ethereum, which is a good thing for Uniswap, because previously Uniswap hasn't been deploying. It has only deployed on Ethereum. So right now they're exploring other chains, and for Aave wise, we are still looking forward to their own stablecoin, which is the GHO. So right now, yeah, GHO right now is on testnet already. I think it's a 2 weeks old news, or maybe 3 weeks old news. So it's something that is pretty bullish for a lot of DeFi users because there's more avenues to actually get more yields and explore, I would say leverage DeFi. Yeah.
Have you looked into GHO tokens?
GHO.
Yeah.
I think GHO will only work if Aave is Aave V3 is on Ethereum. So I think a few weeks back, before GHO testnet was released, V3 has already been deployed Ethereum. So hence they're testing out GHO capabilities, right? So GHO, I think there's a lot of things that will go would mean for Aave or DeFi because GHO gives more utility or gives more utility to Aave, meaning that you provide a collateral at Aave, and you can borrow GHO tokens. And behind the scenes, there's a lot going on. How you mint the GHO, how you liquidate, or how you pay back the GHO. I think all that you can read from their white paper or their white papers. So that would mean that if GHO is a native stablecoin of Aave, means users can actually borrow more stablecoins, more GHO, which there's more money, there's more liquidity in the DeFi market to do other things. I think that's one thing. And behind the scene, how they mint and how they burn the GHO, I think the mechanism is, from what I see, is pretty sound. I think there still needs to be tested because for me, I'm not a programmer myself. I am not a developer myself, so I couldn't, I won't be there to test it and stuff like that. But yeah, so I think it's very positive news for DeFi. So yeah.
Yeah, I agree with you. Yeah, maybe we can do an episode into GHO and after they have launched it successfully and probably cover that.
Yeah, I think it's good. Like the next few episodes or maybe future episodes can do a discussion on stable coins, right?
Yeah.
Because I think there's a trend for DeFi or chains to come out with their own native stable coins right now. Because remember 3 weeks back when we have the AMA with AVAX Avalanche.
Yeah.
Right.
AVAX.
So
yeah.
they
launched a stablecoin as well.
Yeah, they have launched the stablecoin already via Platypus Finance. I forgot what's the stablecoin. I think USP. I'm not sure, but USP. So USP has been out for since the first week or second week of February. So other than AVAX, we have Cardano, which came out with the DJD stablecoin. I think end of January. However, they didn't do much. They didn't give a lot of utility for their stablecoin. So yeah. So there's a lot of different how we can explore different projects or different chains to use the stablecoin. Because I think the next big stablecoin release would be Curve USD, which they said that is still not confirmed yet, or even though the white paper is out, because I think they're still really like testing it to make sure it's really stress test it to be really good, to make sure, because Curve is like a stable coin DEX, right? So they have to make sure that their own stable coin is is of the best quality or best security, so that there won't be another Luna incident, right?
Yeah. Talking about Luna accident, check it out. I think they proposed a new protocol, proposed a new thing about using Maker to back the stablecoin down. You heard of it?
They're planning to use DAI to back the stablecoin.
No, they're planning to use Maker, MKR to back the DAI stablecoin. Use MKR as collateral.
I think it's doable. It's doable because, to be honest, have you seen the VODs of MakerDAO of Maker?
No.
So I think for users, they put their coins as collateral. Some BTC, can be Ethereum, can be those I would say blue chips, crypto assets, to use it collateral to mint DAI. And DAI stablecoin. I think this how it works. And in the case of liquidation wise, when there's liquidation, when collateral ratio reach a certain limit, the VOD gets liquidated, and this assets within your VOD will get auctioned off, right? So when it get auctioned off, how users buy this coin is via MKR tokens. If I'm not wrong, correct me if I'm wrong. So they use MKR to actually purchase these assets that is being auctioned off. So MKR, I think the utility of MKR works that way, rather than using MKR as a collateral for the stablecoin. I think it's two different utility.
Yeah, different utility, but they're proposing something like that. I just came across to a suggestion.
Yes.
Posted by MakerDAO community member.
I think in a way it could increase the utility of Maker, because Maker is only useful when when there's liquidation. Other than that, Maker is like pretty much useless, especially when there's a sudden short squeeze, long squeeze or whatever. Sudden price drops means you have to either you put in more money into your VOD, or you have to liquidate your VOD, right? Yeah. I think all right.
I think we covered a lot of things today. Tomorrow we have ICP-MA. I'm doing the ICP-MA.
Yes.
Have a good holiday, man.
I was supposed to do ICP-MA with Johnny tomorrow, because I'm actually the one who organized the AMA with Herbert. Herbert is I'll say the head of ICP in Greater China. So I met him when I was hosting for one of the Chinese EMA on Huobi. So I came across with him and asked him whether ICP is free to do AMA with us, because they have several new updates for ecosystem. Recently they have integrated with BTC, and I think just last week integrated with Ethereum, which is something positive for the network. And recently we have seen a lot of like BTC layer 2 or BTC wrapped BTC coming into the Ethereum or other like chains like AVAX or Threshold, so that they provide more liquidity to the crypto market, because BTC as its own is not it's useless unless it's wrapped. You can borrow the stable coins as BTC as collateral, and it's something that we discussed earlier. So
Great.
I
think that's all for today, and talk about a lot of things. And let's talk about other hot topics next week, man.
Yes.
Next Wednesday.
So if I think if you want to know more about what Huobi Research has done, go to our Huobi Research website to take a look.
Yeah.
There are videos, there are articles, and on topics that you're interested in. Do go to our Twitter, Huobi_research, to look at what our latest AMAs are. You can even drop Johnny or me some DMs on what we interested to talk about on our next AMA, or you can ask us like what coins that should be listed on Huobi as well.
And also the Huobi Research is going to publish the bi-weekly Bitcoin market report on this Friday, so make sure check out the Medium, Huobi Research Medium. Stay tuned.
Yeah.
And that's all for today.
Yes.
Thanks for working with me.
Yeah, thank you, Johnny. Okay, see you next week.